Good evening, dear colleagues. As always, Sunday, ForexTimes project. I am Dan Strelkov, and today we will consider the probable movement of several trading instruments for the upcoming trading week. I remind you, dear colleagues, that we have trading signals forecasts in several sections in training and ForexTimes community. Please come in and I will do everything for you in the best way. In fact, literally after listening to 3 or 4 of my lectures for you individually under recording, you have, believe me, the development will go by leaps and bounds. Well, let's go. As always, we start with the euro dollar and immediately pay attention to the reports of the Commodity Futures Trading Commission. This is a very interesting point for us, namely, according to the Trade Commission data, we see a decrease in buyers by 14% and a decrease in the capitalization of the trading instrument by 8% to almost $216 billion. But dear colleagues, the thing is that we get these reports on Friday for the reporting period from Tuesday to Tuesday. From that point to, I beg your pardon, to this point. And the question, what is the reason why when a trading instrument is obviously growing, buyers are fleeing from the market? And not just in the amount of 1-2%, but they have become less by 14%. Yes, I understand perfectly well that the trend is upward. What is the reason why buyers leave the market when the market is growing? Probably they know something. So let's assume that the market is waiting for a corrective movement to the lower boundary of the market maker's loss level. And then there is another target level, namely the lower boundary, and the 70 million put option contract accumulation level. However, we are still likely to see the trading instrument rise on Monday, Tuesday, and the first half of Wednesday to the upper boundary of the market maker's loss level. Plus, here is the level of the HDW call premium. And this is the level at which futures contracts are likely to be opened for selling with maximum volumes. Therefore, the level of the market maker's loss and the level of the XDV stake premium are the strongest resistance range at the moment, namely the range of decision making. Therefore, the logic for the upcoming trading week is quite simple. We expect the trading instrument to grow into the decision-making range and consider exclusively selling with the aim of reaching the level of 10920. We had the euro and now we have gold. I think it is going to be interesting here. The thing is that, dear colleagues, we will take as a basis the probability that we are in the correctional wave B of the higher order, correctional wave of the lower order. In fact, we have all this big corrective structure AB, and most likely there will be a further decline, not to the area A, in the wave C of the higher order. However, it is not that simple. There are 2 options for the development of events, which I suppose are the most promising. Of course, there is always the option that we will go up, but we proceed from what is most likely, and we will work out this probability. Dear colleagues, if we look at the reports of the Commodity Futures Trading Commission, we will see an interesting point. In gold, we have a 13% increase in buyers and a 10% increase in capitalization. That is, buyers came into the market from Tuesday to Tuesday and brought almost $30 billion with them because the capitalization increased to $286.5 billion. And now a small moment, please watch, please, colleagues. Small growth, correction, continuation of growth. Euro is growing, small correction, continuation of growth. Question: why do buyers run away from the euro and take their money, while in gold, on the contrary, buyers come and bring more money? Answer: most likely, buyers have already identified the correction movement in the euro, and simply because the euro price is already as close as possible to the strongest resistance range. And we, most likely, do not have such a resistance range for gold. Therefore, for the coming trading week, the value of the trading instrument is likely to grow to the upper boundary of the market maker's loss level, where we will already consider the possibility of entering the market for sale in the wave with the correction wave of the higher order on Wednesday, in the second half of the day, in the first half of the day. How else can I confirm this? Let's pull the Fibonacci extension with you and see what we have. And we have nothing but a Fibonacci extension level of 100%, exactly at the level of the market maker's upper loss boundary in the first half of Wednesday. Maybe in the second half of the day or in the first half of the day, we will already consider a possible decline in the trading instrument, already in a corrective wave. This is the plan for gold, dear colleagues. And now, as always, what you love the most, especially one of the commentators, is Dow Jones and the S&P 500 index. I'm not going to say anything about the S&P 500 index today by Dow Jones. You won't believe it, but so far, and I will continue to say it no matter how much you don't want me to. Excuse me, please, but so far the 31000 level remains the main target level. Dear colleagues, I ask you, if you make comments insulting me, please argue from the point of view of, for example, writing that you work according to patterns, you manage your capital competently. Of course, you always, but according to my expectations of the fall of Dow Jones, you lost. For example, they're 50% of your deposit. Then I will contact you and we will go over all your trades, what you have done there. But in fact, if you work without stop loss levels, you do not manage your capital and do not know how to do it. You do not know how to calculate the lot correctly. That is the volume of market entry, based on the size of stop loss and risk as a percentage of the account balance. And if you do not set the stop loss level, you cannot do it, of course. No way, please do not write very bad messages in the comments. For the simple reason that only you are to blame, no one else. I have already said many, many times on a huge number of lectures that the most important thing on financial markets is not forecasts, it is not patterns of market entry and exit, and not even the ability to place an order. It is capital management. The main thing, the most important thing is competent capital management. The second thing is to psychologically fulfill your own rules, which you have set for yourself. And the third, it is only when patterns, forecasts, entries, exits, and placing your orders begin. Believe me, dear colleagues, you can just take a coin and toss it every morning before the beginning of the European session, and before that build the boundaries of the maximum and minimum of the Asian session. If the coin shows you, for example, the eagle, you buy at the European session when the upper boundary of the Asian session range is broken. If sharply, you sell, but please set stop losses on the highs and lows of the Asian session and take profit at least 1 to 2, up to 1 to TM. Well, such a small range from 1 to 2 and 1 to TM. And believe me, you will get tired of losing your money. Yes, you will just do it for a very long time, especially if you make the ratio of stop loss to take profit 1 to TM. Because according to any probability theory, no matter how we calculate it, you will have at least one profit for 3 or 4 losses if you just flip a coin. But if you do not know how to manage your capital competently, no forecast will not help you. Believe me. Thank you very much, dear colleagues. Again, I recommend you to visit Community ForexTimes, especially since now we have quite a lot of promising trading instruments to go in and only add to them. And these are specifically dollar Canadian, WTI oil, gas, dollar yen, and dollar franc. Here are 1, 2, 3, 4, 5 trading instruments that are promising you can enter them and take a very big profit within 6, 7 months. Thank you very much, dear colleagues. Have a great evening, everyone. Bye-bye, everyone.